Hi there, it's time to look at Virtuous Protocol through the Wyckoff lens. If you're new to my session, these are the 3 key points I'll cover during the session. So let's start with the weekly chart of Virtual. Last week we talked about, there are more tests to come, and indeed this week the price tried to challenge the orange key level of 0.93. So when the price went above this 93 cents orange key level, it got rejected back to below the line. So as of this moment, it seems like it's still receiving quite a bit of force, preventing it from getting to the sign of strength. However, when we get to the daily chart, we'll be able to see more. The spring may or may not appear in an accumulation cycle, so we're parking it over here. Test, from the big picture point of view, is expected to continue. So let's get to the daily chart. Over here, we see that it has a different, different tags, because in the daily time frame, the Wyckoff pattern is not exactly the same as the weekly. So if you're new to my sessions, please remember these are, these tags in the daily chart are experimental. It's not what, it's not a time frame that Wyckoff method was originally designed for. It's more for additional analysis with you in the community, as raised by a community member that can I try applying the method to a lower level time frame. So that's why we have this over here. Okay, this previously I was asking the question, are we actually going through a preliminary support stage for this particular cycle, that this distribution that finishes around a week ago? Okay, if these were the sign of weakness and the last point of supply, and that we're going through a period of preliminary support, then we haven't yet seen the selling climax. However, if this was actually not the sign of weakness and LPSY, this was actually the preliminary support, then we might have seen the selling climax. And what has happened 2-3 days ago was actually the automatic rally over here on the 27th, Thursday. Okay, so it's interesting to see what's going to happen in the next few days, but what happened on Wednesday actually confirmed that this downtrend may be over. So even if I adjust the channel box to the right hand side, what happened over here on Thursday, actually, after adjusting, if I maximize the boundaries just to make sure we are actually outside of it. Alright, so we are getting into a very interesting situation. Today, looking at this candlestick right now, it's trying to stay above the orange key level of 0.93. We're actually on the decision day whether the price is going to finish this downtrend that started somewhere around November 10th. Okay? If this is really the case, then it's telling us that it's probably going to trade sideways instead of coming down to challenge the red key level of 67 cents. However, just one thing over here. If we're going through the accumulation period in the weekly, it's understandable that the trading range is somewhere between the selling climax around 45 cents all the way to the top of the automatic rally around $2.50. If that's the range that the horizontal trading is going to happen, then in the daily chart over here, it can go back to the blue key level or it can go as low as the red key level. Alright, so we have to bear in mind the range, the possible range for the actual price movements. It's much wider than what we see in the daily. So, like what happened over here, from October 23rd, around the red key level, it went to about around the blue key level in just a matter of 7 to 8 days. So if it really starts to come down and bounces off quickly, or it actually started to climb from this point onwards, by the time we get to the next session, it might have finished the test towards the north side already, showing another sign of strength. That's a very positive scenario. Alright, however, I did mention this long wick in the beginning, so it seems like rejection is still there. The only relieving sign is that this volume bar isn't that tall. Okay, there's only about 5 hours left for this week's candle. If it closes around that, and if we look at the selling volume of these bars, those volume weren't actually very high. So that's why I said in the title, it may be that Virtual is trying to get to challenge the blue key level of around $2 again. Alright, so let's hope that's the case, and don't try to come back down to the red, even though there's still a chance for it to come test it and then bounce off from that point onwards. So remember, that was the second test. We can have other tests to come around the red level. So while we remain positive, be cautious that the downside risk is not zero. Alright, thanks for joining me for this virtual session. See you later.